if you're a long-term thinker and all this stuff is happening and you fully believe in this product long-term, lock it up. If you're a day trader trying to day trade Bitcoin and crypto and that's not your specialty, do not play with fire. It's not going to work in your favor. To me, I think long-term thinking is the solution to anything if you're willing to buy and hold something long-term. I bought gold, bunch of it, a few years ago. And I said, listen, I'm not going to just buy an ounce or two. I'm going to buy kilos. So we bought gold, $48,000 to $52,000. You remember this. What is the number right now for gold prices for kilo? I think it hit a high of 174. Right now, it's probably around 150, 163. You don't even think about this. And when I bought it, everybody said, you shouldn't buy gold. This is not going to be this. This is not going to be that. Long-term thinking is an edge that you have. So let's...
Good morning, everybody. Hello, and welcome back to another episode of your favorite crypto news related channel. And congratulations, you just survived the largest liquidation event in crypto history, taking us to the ranges that many of our listeners have been waiting for. And during today's episode, we're going to be breaking down what happened yesterday during that massive liquidation event, highlighting the bounce that we're seeing across the crypto space today. Now, I would be very cautious about some of the positive price action that we're witnessing this morning. This could be what you would call a short squeeze. So everybody starts betting that the crypto market is going to continue to fall. That's when we get a rebound, shorts squeezed out, and then we have a final wipeout in the crypto space. And I want to be very cautiously optimistic throughout today's episode because we are seeing a major rebound in the XRP price chart. And that's what I'm going to be kicking off today's show with, starting off with an analysis from the blockchain backer. Now, I'm also going to be giving you guys a brand new update from the United States government in regards to the Clarity Act, as Treasury Secretary Scott Bessent said it's impossible for crypto to progress in the United States without getting some form of clarity here in 2026. And he goes as far as to say he thinks it will get done this calendar year, guys. But if you're excited or if you're just enjoying this content, you're along for the ride, show us some love, smash that like button, and let's celebrate just for a moment here to kick off today's episode because we are seeing a massive rebound in the crypto space. Bitcoin went as low as $61,000 yesterday during the collapse. Now, the positive side of that, we took out a bunch of the key ranges that we had been keeping an eye on for market bottoms. And I think, Clinton, you do a phenomenal job on your Twitter talking about the Wyckoff accumulation. We're also going to get into blockchain backers analysis showing us how the liquidation event we experienced yesterday puts us in a very strong position for the market to have created a local bottom. And what does that mean? We may not see crypto prices go much lower than we did yesterday. We saw XRP at $1.10. We saw Bitcoin 61,000. We saw Ethereum, I think it was as low as $1,750 yesterday. And hopefully some of our listeners, the smart investors, were able to buy some of these assets at lower prices and enjoy this 20% pump that we're experiencing this morning. Now, I'm always transparent about what I'm doing, guys. I bought the dip. I've been very transparent. I was buying XRP at $2.20. I was buying it at $1.85. So when I was able to purchase sub 130 XRP yesterday, I was snatching up that opportunity, and not in these great bulk orders like I'm some phenomenal wealthy individual over here. I'm just talking about the dollar cost averaging a few $100s a week, putting them into your favorite projects. That's how you create a very strong portfolio in the long term. And what do we know for sure, guys? This market is undervalued. But if you're enjoying this content, smash that like button. We're going to dive into all these exciting topics starting off right here, right now with this brand new analysis out of Blockchain Backer. Now, what is he discussing in this brief clip? Is the bottom in for the XRP price chart? I'd like to hear from our community. One's in chat if you think the bottom is in. Two's in chat if you think we are going lower. And that would mean if we go lower, we're probably going to see a sub $1 XRP. But that's what we're going to get into right here, right now. With that being said, let's break it down.
It's kind of like the altcoin show, and it's just like a Bitcoin retrace happening in this moment. All a bunch of hopium for us to debate over. However, I do think we have completed, if not the whole move already, then the vast majority of it, and for it just kind of go double confirm a bottom, maybe to like 50K, maybe, right? I don't want to come on here with timing predictions and say, hey, we're just going to shoot to the moon here in the next month or something like that at all. Nor do I want to say, hey, it's going to have a reaction like that. But the thoughts have been, this is where we're heading back to. We've gotten here. That's what a capitulation looks like. It's loud. Everybody's screaming. We've got a lot of volume that comes in here after it breaks down. My personal thoughts are the worst of it is behind us. Now we go into discussing about recoveries and accumulation. So I'm very, very excited to move into this new chapter. I hope that you weathered the storm well. I was able to get some buys in yesterday. I'm going to kind of give this thing a little bit of time to show its hand before entering more capital, but I do intend to enter in even more capital. But I got about 25% of what I wanted to get into the market in right there. It may just end up being kind of a slow grind accumulation thing where it's just a couple of percentage points every day rather than like large chunks of 25% at particular levels.
And I want to pause for a moment and just kind of comment here, because once again, what have we really seen in the XRP price chart is that retail investors are out of here. They're totally gone. And we're starting to see people capitulate on their individual portfolios as well. But the optimistic side of this is that when you look at what's happening with the ETFs, we are seeing volume at a rate that we have never seen before. We are seeing consistent $50 million worth of daily volume on the XRP ETFs alone. And this is unprecedented for the altcoin market, guys. Even if you look at what Ethereum and Solana are doing, they aren't doing nearly the daily volume that we see with XRP. And what's really important for our listeners is the inflows, right? We want to know how many people are actually buying this asset versus selling it through the ETF products. Well, ETF inflows for XRP have been net positive all throughout this entire pullback. So while people were freaking out, we're watching the market collapse, there's maximum uncertainty in the air. Yet when you really look at the data and analytics, it's clear that institutional investors are doubling down on these assets at lower prices. And I did start off this episode by talking about extreme fear. Yesterday, Brad Garlinghouse shared what he considered to be his favorite Warren Buffett quote. And it was be greedy when others are fearful and be fearful when others are greedy. So again, what does that mean? It means take profit when we're in a bull run and double down on the assets you understand in a bear market. Well, we are definitively in a bear market right here, right now. We've got Bitcoin down over 50%. At least prior to the pump that we had this morning, we had Bitcoin lose over 50% of its market cap in only a 3.5-month time period. If I told you guys you would be able to buy $1.20 XRP back in July when it was $3.60, people would have begged for the opportunity. And so you're being given that opportunity today. There wasn't some massive catalyst that changed what's happening in the crypto market here, guys. It's not like something was denied. We had a crypto exchange go under. And I do want to give a big shout out to Love Stocks, because she said, do you think there's going to be another catalyst here that takes crypto prices for that final leg lower? I don't think so. If somebody said, what are the chances here? I would say 70% no, 20% or 30% chance of yes here. And the logic behind that is what Blockchain Backer had to say in his brief video yesterday, where he said, people were asking him the question, is there one more major catalyst on the horizon? He goes, we are in the major catalyst right now. Here's the clip.
Do you think we'll get another leg up for XRP before a deeper crash? Sir, we're in the deeper crash. We are living in it right now. I do want to say, I want to be respectful. I do know that these moments can be very painful for a lot of people. I do want to say they're usually temporary. They're usually just a brief moment in time. I can't guarantee anything, but typically these are, the ending phases of these types of moves, and is when, a lot of the emotions swap, a lot of the hope kind of gets given up, and people think, things won't ever turn back around again. This is usually the phase we enter into where we start looking for bottoms, looking for accumulations, looking for all that type of stuff. And the crowd sentiment has really shifted at that point. And everybody kind of gives up hope. There's your line in the sand of hope. And now it's like, we're never coming back and all that kind of stuff. And I just want to let you know, if you're feeling a lot of pain today, just remember, man, these things happen all the time in markets. They're totally normal, and they're usually temporary. Okay. And things always, come back in one way or another. And we'll do that day by day and try to figure all these things out right now. So we're right on it, sitting right on top of it. Will this be the moment that it pops off of here? I don't know. There's going to have to be some type of evidence proving itself to be that, and to bounce off of that. But minimum requirements are all met in here. So for me to come on here and be a full-fledged bear from here on out, I would be taking a really big gamble to do that, a really big brand reputational gamble to continue doing it beyond this level, and in that being strongly convicted that it has to keep going lower from here, I think is a big gamble too. It doesn't mean it can't. I'll show different stuff in here. We'll talk about different things. And I don't know where the bottom's going to end up being, but I can kind of give you ideas on things that have happened historically and what they could look like. Obviously, where we're at today is a very interesting level, and we'll see if we can get some type of like liquidation to mark the end and go ahead and confirm that for us today. But,
and there you have it, guys. So again, blockchain backer, he doesn't think we need another catalyst to go lower. We basically experienced that major catalyst yesterday with the huge liquidation event we saw across the entire crypto space. And there was a video out there. It got 2.4 million views in less than 24 hours. This is Nick O'Neill talking about the crypto collapse. Now, I know a lot of people, this guy's pretty funny. He does some humorous posts as well, but I got to say, this is one of those posts. This guy, he might be right on the money. But I want to hear from you guys. Do you believe we get another leg down in the crypto space? One's for yes, two's for no. And we did already pass 285 likes on today's episode. If you're enjoying today's content, smash that like button. It's a very simple way to help out the channel. And I want to be absolutely certain about one thing. Congratulations and thank you to the Good Evening Crypto community. The fact that there are thousands of people out there who see the same vision I do, doubling down at these assets, taking advantage of the major pullback that we're seeing in the market today, and not being scared out of this market like the institutions want the retail investors to be. It is our community, is the people who double down on these assets at lower prices that will reap the benefits when we inevitably increase in price. This market in general, meaning Bitcoin, XRP, Ethereum, all of these assets were beat to increase in value against the US dollar. Nothing has changed on that front. Now we're seeing some strength in the US dollar. That's having an impact on gold, on silver, on the S&P, and of course on digital assets. But in this short video, we're going to talk about the major liquidation event that's taking place and what this could mean for Michael Saylor, guys. We're going to break it down. Here it is.
Well, the crypto crash continues, but this isn't just a crypto crash. This is the great unwind. Every headline says Bitcoin crashed below 70,000, but Bitcoin didn't crash because of Bitcoin. What you're watching right now is the greatest forced liquidation event since COVID. Last night, silver crashed 22% in 2 hours. Gold dropped 9%. Its worst day in decades. $830 billion wiped from software stocks in 6 days. When everything sells at the same time, that's not people deciding that these assets suck. That's people being forced to sell some of their assets to cover their losses that are occurring somewhere else. Michael Burry, the guy who made almost $1 billion from the financial collapse of 2007, he just called it a collateral death spiral. Here's how that works. Over the last 2 years, institutions loaded up on leverage, borrowing against crypto to buy stocks, metals, and everything else. When crypto fell, their collateral shrunk. Their brokers called and said, "Yo, bro, send me more money or we're gonna sell." Well, they didn't have it. So they dumped their silver, their gold, their tech stocks, and that triggered more margin calls on other funds. And the dominoes keep falling. $2.56 billion in Bitcoin positions were forced liquidated. $900 billion erased from crypto in days. Here's the thing that nobody's saying though. Forced selling, it eventually ends. Fundamentals don't actually change. This isn't the market saying crypto's dead. This is the great unwind. And when the leverage is gone, what's left is actually opportunity.
And there you have it, guys. So I think he makes a phenomenal point about what's happening right here. And somebody said, Abs, it's Conspiracy Friday. It absolutely is. And that's why we're diving into some of this content. Now, I do have some emails that we can go over towards the end of the episode, depending on if we want to go that direction. But in regards to what he had to say in this video, I think it's absolutely essential that we prioritize this when we're looking at our own crypto portfolios. What happened over this weekend wasn't that something changed in the digital asset market. There wasn't a major exchange that went under. There wasn't a crypto project that rug pulled. Instead, there was a cascading effect on the margin calls from brokerages, and people are being forced to sell their Bitcoin through these ETFs. The same way that the Bitcoin ETF propped up the Bitcoin price during the bull market, it is going to have a cascading effect on the Bitcoin price during these bear markets. And that's what we saw yesterday, where Bitcoin was being sold at 100 times the rate we typically see when it comes to these ETF products. And that's why I wasn't necessarily concerned about what's happening with the altcoins. When we looked at things like Ethereum, when we looked at things like even Chainlink and AVAX, things of that nature, nothing fundamentally has changed with these projects, except for the fact that they are being dragged down with the liquidity of Bitcoin. Hedera is another great example, guys. This is a project I firmly believe in. Over these next 3 or 4 years, my conviction about Hedera, it's almost as strong as XRP. XRP is in a class of its own, but this is another great example of nothing happened with Hedera. Nothing structurally changed with Hedera. we are trading at less than 10 cents. This token was nearly 30 cents in value just a few months ago. And that's why I'm constantly encouraging our listeners to take this long-term approach and not be overly fixated on what happens from a day-to-day price action standpoint, but instead look at the momentum of the market. Is crypto here to stay? If crypto's here to stay, then the assets that survive are going to increase in value. That's going to be Bitcoin. That's going to be Ethereum. That's going to be XRP. And of course, it's probably going to be Solana as well. Now, I don't own a lot of Solana. I've never owned a lot of Solana, but I will say the Solana price chart looks a lot more dangerous than anything that's happening for the XRP community. But there's a lot of exciting content to get into for today's episode. So I am going to play this brand new clip as well. This is Treasury Secretary Scott Bessent talking about the Clarity Act. And Senator Cynthia Lummis is saying, do we need the Clarity Act signed? Well, Scott says this is a priority for the Trump administration in this calendar year of 2026. Here's the brand new clip.
On what you know now, what is your opinion about the importance of having clear rules of the road, market structure legislation in the United States?
Look, I think that it's impossible to proceed without it. We have to get this Clarity Act across the finish line, and any market participants who don't want it should move to El Salvador.
So as a industry, what is the benefit to having this industry embedded in the U.S. economy?
Well, again, as I said, that there seem to be people who want to live in the U.S. but not have rules for this important industry, and we've got to bring safe, sound, and smart practices and the oversight of the U.S. government, but also allow for the freedom that is crypto. And I think it's a balance that is being worked out. It was worked out in the Genius Act, and I'm confident with leadership of people on both sides of the aisle that we can get clarity across the line this year.
There you have it, guys. Clarity Act being approved in 2026. This would be the catalyst that we needed to definitively change the momentum of the market. And why is the Clarity Act so important? Well, this clip from Kevin O'Leary explains it perfectly. The trillions of dollars that are on the sidelines, the largest pools of capital on the planet, once the Clarity Act is approved, those pools of capital now enter the crypto space, and every single one of us is here before that moment.
I love the idea of innovation. The money center banks have been sitting on their hands for years, crapping on the crypto industry, but it's not about Bitcoin. Nothing to do with Bitcoin. It's digital payment systems. That's the potential. That's the amazing opportunity we have here. Now, the reason that will be important and why we'll get price appreciation on Bitcoin is the minute that happens, it will signal the move to the next act, the Market Infrastructure Act. And why that matters to everybody in this room is we will finally determine, is Bitcoin a commodity or a security? And when that is determined and regulated, Katie bar the doors, $1 trillion will come and index that asset. Let's all hope that happens while we're all alive here. Anyways.
Well, it looks like we're going to make it to the finish line, guys. At least that's what it looks like here. And I was going to make a joke there, but I'll kind of not make that joke for today's episode. And instead, I'll play another brand new clip here where this is Scott Bessent once again yesterday talking about the Clarity Act and how starting today, we are going to see the next round of market structure talks begin with House Democrats. What do we know for sure? The banks are funding many of these House Democrats in order to push these anti-crypto narratives. There was a great episode that was done by Paul Barron yesterday, if you guys want to go and check it out, where he showed that Senator Tim Scott is funded by like JP Morgan, Citibank, everybody who's at the opposite side of the aisle when it comes to crypto adoption. Well, that really exposes the game. The second that these banks are telling their politicians, aka political puppets, that it's time to capitulate, we are going to see Democrats start to support the Clarity Act, and that will bring those trillions of dollars in that we have been talking about. But we do already have 2,500 live listeners, 1,400 plus watching on YouTube. If you're enjoying this content, smash that like button. It is Conspiracy Friday, so we're going to start breaking down some conspiratorial topics as well. But we already passed 400 likes for the show. The goal for today, can we reach 589? I think it's possible. Here's the last video I'm going to show you guys of politics. This is Scott Bessent just yesterday.
I feel like I'm in crypto hell. I know, Cynthia, welcome to it, and God bless you. And you know, I think, and actually, and I really appreciate what you did on the stablecoins bill. And I think, we got a lot of broad bipartisan support. At least many of us, I think all of my Republicans and many of my Democratic friends agree we want these products built in America. Crypto's here to stay, and we need clear rules of the road. And stablecoin was simple compared to market structure. But you have one of the things that we see in crypto, and we are working our tail off. You can please, I think the chairman and I've spent, and Cynthia and others spent more time on this than, anyway, I'm going to use up my time. But there are a lot of issues around national security that you have unique perspectives on with FinCEN, with the Secret Service. We sure as heck don't want to take away from prosecutors some of the tools they have to go against bad guys. We've got to have some area to close down some of the gaps in DeFi. And again, there's bipartisan agreement on this, but boy, we need, I think we're starting to get some of the technical assistance. But if you can just make clear that this is a real problem, and we'll deal with yields and rewards, we'll deal with a host of other issues, but these national security issues around DeFi are real, and we need to not create a set of rules that leaves huge exemptions and candidly takes away some of the prosecutorial powers that exist today.
Senator, I look forward to working with you on that. We've had problems, and historically, there's problems when the technology gets ahead of the legislation. So if we can work with you on the legislation it's for both OFAC and FinCEN. We
love your technical assistance, and I think, Mr. Chairman and Senator Lomas, that you will be invited to our next round robin on that, and that may be later today or tomorrow or Monday. So
good. And if you could convince some of there seems to be a nihilist group in the industry who would prefer no regulation over this very good regulation.
Amen, brother. So weigh in.
I do.
Weigh in.
Early and often, Senator.
Weigh in. One last comment. I know my.
I think that was a great exchange there, guys, because again, first of all, this is the Democratic candidate here talking about how they want the Clarity Act approved because it's great for American innovation. We've made it so much about, the yield on stable coins and are banks going to allow for this bill to be passed. We've kind of forgotten the entire purpose behind the passing of the Clarity Act, which is to allow for the institutions to adopt digital assets, meaning the biggest companies on the planet will now get permission to profit off of this technology going forward. And that's why I'm so confident that we get this done in 2026. It's not because they want crypto prices to increase. It's not even because they care about retail investors. It is about the fact that once the Clarity Act is approved, the biggest companies in America can now profit off of digital assets. Mic drop, walk away. That's pretty much all we need to know about where this market is headed over the next 6 to 8 months. And if the Clarity Act is approved, with digital asset prices at these all-time lows, we haven't seen these levels since like late 2023, early 2024. Well, that's going to present a massive opportunity for these big companies to purchase these assets at lower prices. But I want to hear from you guys once again. Do you believe the XRP price chart is going sub $1? That's what we're going to break down for this next portion of the episode with this blockchain backer analysis. If you're enjoying this content, smash that like button. Remember, the goal for today, can we pass 589 likes? Miracles do happen, my friends. But let's listen to what BC Backer had to say, and then we'll talk about it.
Maybe more of a kind of slower grind accumulation. Either way, the thing I'm kind of waiting for right now is whether or not we're going to see something along the lines of this right in here, where we're just going to kind of range here for a second. And there's like a last flush, maybe to like 50 to 52K, which would essentially give you waves of equal length in here, which would end up being the same over here for the total market cap of crypto. And so just kind of being patient for that. But at this point, it's about being greedy, right? The hardest part was sitting on the hands throughout the whole thing. While I certainly think this is totally reasonable to happen, and in my hearts of hearts, I think it's the most probable thing to happen, I still got to take some stabs at it right here, just in case that was good enough, right? And then kind of give it a little time to show its hand and see what kind of accumulation we're going to do in here. But, we got Bitcoin back down to the 200-week moving average. You got XRP back to its 200-week moving average. The difficulty about using the 200-week moving average on the XRP price chart in particular is, while we can use our biases to say, hey, that was a pretty good reaction there today, there's no real historical precedent set by the 200-week moving average to say that there's a lot of reaction on it or just a lot of violations that happen around it. But not a bad spot, mixed with the fact that Bitcoin kind of got there too. So I do think the worst of it is behind us. You saw like articles getting written, write-ups being written about the pain, and coping articles being written yesterday. And markets in the afternoon, we had 3,800 concurrent viewers. Markets in the morning has typically been, hovering in that like 1,400 to 2,000. So we saw a lot of people tune in to watch that live stream during that price action. To me, that tells me, one, we see a lot of volume on the actual chart, and then we see a lot of volume in regards to social interest at the same time, meaning it's like a pivotal extreme point to draw in that much attention at that time. Now, back in the day, you go back 6 months from today, where 3,000 viewers was the norm in the market. However, people lost a lot of interest once prices started falling, right? We saw interest fall, interest wane, go down to 1,400 to 2,000. That moment in particular drummed up a lot of interest, especially for just being like a random 2 o'clock and 3 o'clock in the afternoon. I don't even know what time that thing was at. Live stream to happen in the middle of the afternoon. A lot of interest. So I do think the worst of it is behind us. What I don't know with strong conviction yet is whether or not it's going to be the kind of like fake bottom that happens really right here before we set the real one, and then we ricochet from there, right? Like, while this one shows us is getting like a solid liquidation, which was.
So guys, just one's in chat if you think we're going lower, two's in chat if you think the bottom is in. Now, I wouldn't be surprised at all. And again, I'm just a guy on the internet learning like you guys are. But one of the things I would say that's a little bit different about this particular bear market, if you'd like to call it that, is that there was no major catalyst. Like, there's no Mt. Gox, there's no FTX collapse, there's no Terra Luna decoupling, there's nothing along those lines. But instead, we're just seeing a massive liquidation event across the entire crypto space. And that's why I think blockchain backers analysis could be spot on, that maybe we get one more catalyst that takes Bitcoin down to that mid $55,000, $53,000 range. And that's when retail investors will be totally tapped out of this market. Pessimism will be at an all-time high. Optimism will be at an all-time low. And hopefully it's our community and people in our live chat that understand what comes after the major crash in price. Huge opportunity for the projects that survive. And that's what I'd like to focus on, guys. We did pass 500 likes. Shout out to you for being the best community in all of crypto. Let's finish this clip and we'll keep rocking and rolling.
Boy, we never got yesterday. There was no huge liquidation. I think we got to like $2.6 billion. Right? This thing's a little outdated at this point, saying 2.5, but I think the highest I saw it get to was 2.6. But it was very orderly in the way that it happened. And the thing is just, does there have to be like a second one? Or like when XRP did that back in 2022, right? One quick reaction happens in here, but then it does go hit that second one. Right. So that's just going to be kind of where we're at. But, you look back on it and say to yourself, at this point in time, right here, when this had happened, was the worst of it essentially behind us back in 2022? Yeah, obviously. Was the sentiment behind us? No, sentiment's still rough. But was the worst of it behind us at that point? Yeah. Right. And so for these last several months, we've talked about us being in this zone in here due to the larger time frame indicators, like especially those monthly indicators implying that's where we were at based on all this stuff, right? We put that on log scale to see in here, right? Once you're in this stuff right in here, where are you? You're right here. Then once it breaks down from the range, right? Once that big liquidation, fear, scariness, high volume happens, it's the worst of it. Right. And to not be mistaken, I definitely don't think that this price action is going to look the same as the bottom of 2022. What we've noticed is on repeat is we see that like 2014, 2022, here we are, 2025, 2026, these bear market crashes and falls, while morphed slightly, you can find the similarities in there to see if you're actually in a bear market. But the thing that happens is once you get beyond that point, all the bottoms and recoveries look very different. So it's hard to say, hey, this is going to look identical to, what past recoveries have looked like, or that it's going to do the same thing or take as long, or if it's going to be a big retrace or if shoot out for another wave, because they all look very different. But once we've gotten to this phase in here, the worst of it has been behind us.
And there you have it, guys. I thought that was a really great analysis at a blockchain backer, just giving us a realistic perception of what could be taking place in the crypto space today. Now, this is a brand new tweet that was just put out by Scott Melker. And this guy, he's not pro XRP in any way, shape, or form from my own analysis. That's my opinion there. But he said XRP looks insane. Today's candle is currently bullishly engulfing yesterday on equal volume for 11 a.m. Eastern time. Big money is backing up the Brinks truck on altcoins right here, right now. And I found another analysis out of Blockchain Backer where he was talking about how the daily volume on the XRP price chart is massively higher than it was just a couple of days ago. So it goes to show big money is stepping into the market and buying up the dip on XRP. But now we're going to look at the stablecoin market because, again, when the market's pumping, stablecoins are being minted. And you guys can see the correlation right here where $51 billion was the lowest level that we reached. In just the last month and a half, we are back up to 102 billion. Stablecoin inflows have just doubled for the crypto market. Even as crypto is selling off, money isn't leaving crypto. Weekly stablecoin inflows jumped from about 51 billion in late December to roughly $102 billion now, well above the 90-day average of 89 billion. Sideline capital is stacking in the crypto space. So again, what are we really watching here? We're trying to figure out the signals of when more money is going to be entering digital assets. We can look at the Clarity Act. We can look at the stablecoin minting. We can look at the volume on these networks. But long story short, all we're looking for is money moving from the sidelines and buying up the dip. And I've been transparent, guys. I'm buying the dip. I could be totally wrong. You never try to catch a falling knife. But like I said, I was wrong in December when I was buying XRP at 220. I was wrong in January when I was buying XRP at 185. Eventually, given a long enough period of time, the XRP price chart will continue its movement back up into the right, and that's when I'll reap the benefits. I'm not even thinking about the next 2 weeks or 3 months or anything along those lines. I'm looking at this market objectively and saying, okay, last July XRP was $3.60. Today it's $1.50. You tell me if that's a good deal. Has anything changed with the asset? And that's kind of how I'm observing this market. We did just pass the 30-minute mark, guys. If you're having fun, you enjoy this content, smash that like button. The goal for today, can we reach 589 likes on the program? That's something I think is possible. We are at 557 at the time of this announcement, guys. But long story short, the massive capitulation move is now behind us. We can start focusing on where is the market bottom, what's next for the digital asset space at large, and what can we do to put ourselves in a position to take advantage of that growth when it re-enters the market. Well, this is where I defer to this interview here where Paul Barron sat down with former CFTC chairman Chris Giancarlo, and they're talking about everything related to XRP, but I think our listeners will find this valuable. Here's the brief clip.
Well, one of the things I think you look at in terms of the innovation landslide that's going to be coming to the US. You could compare this to what Ripple was able to do in the EU just here recently, just I think this week, announcing that they have now new certificates for approval. This is pretty much going to open up the EU for them in terms of making both RLUSD, their stablecoin, and XRP. That'll be utilized in the infrastructure in Europe. Almost every bank over there will be able to hold that from a regulated standpoint. So they're already on their way. If we get this clarity, how big will that be to companies like Ripple, to the ecosystem of Ethereum, what's happening within Solana, even Bitcoin to a certain extent? How big do you think it will be for innovation?
So I think it's going to be big. I think clarity is really important, but it's important in kind of, again, a little heterodox my view on this. If it doesn't get passed, American banking goes back to sleep, I think, for another generation in terms of digital architecture. While jurisdictions like Europe, with their MiCA legislation, will move forward. MiCA is not a great piece of legislation, but at least it makes it clear.
That's something.
Right, exactly, against nothing in the United States. So their banks will actually be able to get an advantage over American banks. You know, American banks have been asleep on almost every innovation, right? When chips went into credit cards, we were still swiping them. You know, in so many ways, when it comes to retail innovation, our banks just sit on that interest collection, the carry trade, and don't innovate. And it's only when popular demand, you know, people come back from Europe and say, why am I still swiping when I'm using a chip over there? And I'm embarrassed that I don't have a chip in my card when I shop in Europe. That was years ago, but American banks will only innovate when forced to. I think we need clarity to force them. And once they no longer have the cover of a lack of legislation, they no longer have the cover to say there's too much regulatory risk, they will have to innovate. And then they will be adopting a digital network architecture, whether it's XRP, and we all have to tip our hat to XRP. That was, you know, poster child for the Gensler-Warren attack on crypto, and they withstood it, and they stood up to it, and they're still standing and now persevering. So I tip my hat. There's also other L1s out there like the Canton network, which is really developing very rapidly as a wholesale solution. I fully don't believe those who are maximalist and say the whole world's going to reduce down to Ethereum, the whole world's going to reduce down to XRP, the whole world's going to reduce down to Canton. I think the digital network future will be as complicated as the analog past.
Absolutely.
There will be multiple layer ones that will find a addressable market, and they will succeed. Now, I don't know if there'll be hundreds, but I think there may well be dozens that will find a path. You know, even in the analog past, when it came to credit cards, everything didn't go to MasterCard. You had Visa, you've got Discover, you've got American Express. They all found an addressable market. And I think the same thing is going to happen in the digital network future.
That's an awesome analysis, guys. One's in chat if you agree, two's in chat if you disagree. And he did mention the Canton Network, which is really interesting because I believe Canton Network is now the #1 blockchain in the world for real-world tokenized assets on chain. Guys, feel free to correct me in chat if I'm correct or if I'm wrong. And we can get into this permission domain conversation here. Somebody threw a comment about this just a moment ago. Abs, please discuss the importance of permission domains, which went live recently in the upcoming February 18th permission DEX. Banks can now issue direct and know who is providing liquidity, which is huge. I do have an article that I'm going to take you guys through towards the end of the episode about that. But I do want to give a huge thank you. We did pass 600 likes on the show. Shout out to you guys for being literally the best community in the entire crypto space. And I say that with full confidence. But what's really happening here is that he's talking about how the same thing that Brad has said for years, there's going to be an addressable market for each one of these individual projects. XRP is going to have its niche, Chainlink will, Bitcoin will, Ethereum will, Solana will, but it's outside that top 25 to top 50 that's going to be in trouble. It's the Polygons, the Litecoins, the tokens that used to have these robust networks that are slowly dying. That's where I would be overly concerned about the future of the space. Maybe something our listeners should do, and this is not financial advice, just looking at it objectively, is that if you have projects you bought 5 or 10 years ago and you don't believe in them anymore, maybe those projects are never going to have a liquidity pump. When this market gets a rebound, it might be smart to capitulate on some of those ideas that are outdated. And here's an example that I applied for myself, like the project Mana. It was a decentralized narrative from back during the 2021 cycle. I had a bunch of that token from back then, and I'm like, I don't believe in this project anymore. I'm just going to report these losses, use them on my tax returns, and put this money into a better project. Many of our listeners may consider doing the same thing, guys. It could be a good time to capitulate if we get a rebound in the market, where you start moving some of that capital from projects that you bought a few years ago with old narratives. You put them into some newer projects with newer narratives. And that's just what I'm doing. I'm always transparent about kind of how I'm operating and what I'm doing. Whether I'm right, whether I'm wrong, I'm always truthful about what I got going on. And I shared that during yesterday's episode where I'm like, it's not like I'm saying one thing and doing another. I am putting my money where my mouth is. I believe the digital asset space is here to stay. I think the Clarity Act is going to be huge. I think prices are going to rebound. And that's what I'm doing behind the scenes as well. But I want to play this brief clip because it is Conspiracy Friday. We're 37 minutes into the show. We're going to break down a little bit of a conspiratorial topic for the end of today's episode. The magical leak on Coinbase. Is it a coincidence that most damaging Jeffrey Epstein documents in years dropped exactly when the banking system finally felt the heat? Last Friday, the DOJ released 3 million pages of investigative files under the 2026 Transparency Act, and buried in the data was a bombshell for the crypto world. Jeffrey Epstein was a seed investor in Coinbase. Now, the timing, a strategic retributional nuke. The headlines didn't just happen. They arrived at the peak of a brutal lobby war between Coinbase, Wall Street, and the Digital Asset Stability Act. Stability Act. The flight, Coinbase is currently pushing for staking rights that would let regular people earn high interest rewards, usually reserved for big banks. But the leak, just as Coinbase CEOs were testifying in DC, the Epstein-Coinbase connection, a $3 million passive investment from 2014, was highlighted and discovered by the media. So what's the new playbook here? This is the managed leak in action, according to Jungle Inc. In 2026, you don't need to bribe politicians to work in a banking war. You just need to search Epstein archives and your opponent's last name. Now, that's pretty interesting, guys. The assets liability. Epstein used to be a broker who connected the elite. Today, these files are a library of leverage that legacy institutions can use to discipline disruptors. The irony, the same banks and tech giants that socialized with Epstein for decades are now using this ghost to mortalize their competition on the market. The bottom line, according to Jungle Inc., once again, in a world where radically transparent coincidences like this are usually just information laundering. When banks can't beat the tech, they burn the person. And I thought that was a pretty interesting thread there from Jungle Inc. He's done a really good job kind of diving into this stuff. I took about a 2-day break from all the Epstein content. started to just wear on me, if that makes sense. So I don't know. I'm sure a lot of people are still diving into this stuff, but it's just really dark. I got to take it with kind of like, I got to give myself a little bit of break from this, but I do want to play a quick video and then we'll talk about it.
Jeffrey Epstein invested into the crypto marketplace known as Coinbase back in 2014, which we now know about thanks to the latest tranche of Epstein files that were released by the Department of Justice. Now, Epstein, in fact, was aware of Bitcoin as early as 2011, and he saw it as an opportunity, as many did. And so that year, he wrote the following in an email. Amir, the Bitcoin idea is brilliant, but I suggest has some serious downsides, as I'm sure you are aware. If you can find time, please call my office, and then some of the email is redacted.
What's really interesting, guys, I'm not sure if you've been reading the emails as well, but like, what is up with these equal symbols that are always in the email? And like, they put double commas. There's all these like intentional little spelling errors, like a space between the comma on brilliant. That's another thing that I really kind of caught my attention as I was reading some of this stuff. I'm like, I'm wondering if those are codes and signals as well. But I don't buy too much into this whole narrative that this is even going to have any impact on Coinbase whatsoever. What they're talking about is a seed investment round from 2014, and that's not necessarily applicable to anything that's happening in the space today. We are 12 years out from this entire funding narrative, but I did think you guys would agree that this is kind of interesting that he was even involved in the inception of Coinbase and was putting money into the seed funding round. We did just pass 40 minutes, guys. If you enjoyed today's content, smash that like button, subscribe to the channel, and if you want to set yourself up for success, take advantage of the ITrust Capital link that we have below. By clicking our link, you guys can set up a Roth IRA where you get tax-free crypto gains if you're 59 and up, or if you hold these assets for 5 years. And I think that's something all of our listeners should be taking advantage of. I had a conversation with these guys yesterday. They have received phenomenal feedback from our community using the ITrust Capital product. And if you guys use this product, throw a 1 in chat and let the other listeners know why this stuff is so great. You get access to precious metals, gold and silver, of course, and your digital assets, which can all have tax-deferred gains within this product. This is something that me and Johnny are both taking advantage of. And I'd encourage our listeners, even if you don't set one up, go and check it out, guys. There's no harm in clicking on the link, scrolling through the website, and just looking at what products they're offering, because I think a lot of our listeners do want to reduce the amount of taxes that are owed on these great crypto gains. Yeah, we're going through a little bit of a bear market here. We're getting a slight pullback, but the reality is that when asset prices go higher, there's going to be plenty of gains and plenty of taxes owed. The best thing you can do is start planning for that right here, right now. And the best way to do it, click on our ITrust Capital link below. You're going to get a $100 free sign-up bonus. So take advantage of that, guys. But the results for today's user poll, I wanted to make sure I addressed this during today's show as well. The question that we asked you guys is, does XRP crash below $1? 62% say no. 38% say yes. One of the things that we know for sure, guys, it only takes one catalyst, one narrative to completely flip this market on its head. And we're in dangerous territory, but the reality is the major move is behind us. So we love you guys. We appreciate you all. If you enjoyed this content, smash that like button, subscribe to the channel. Have a great weekend. Go out, touch some grass, hug some family, enjoy life. Life is too short. And the best part about it, crypto will be back on Monday, my friends. So we love you guys. We appreciate you all. And we'll see you in the next.
I'm going to be so proud of you, President, and I don't care about that. But you are going to be so proud of your country, because we're going to turn it around and we're going to start winning again. We're going to win so much. We're going to win at every level. We're going to win economically. We're going to win with the economy. We're going to win with military. We're going to win with healthcare and for our veterans. We're going to win with every single facet. We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more.
So if you're looking to implement the same strategies that we do here on Good Evening Crypto, I would encourage all of our listeners to click on the Merlin link below and sign up for ITrust Capital as well. Now, why are our listeners going to do this? By leveraging the Merlin application, you can create a profit plan for yourself so you know exactly where you're going to be exiting this market. But leveraging ITrust through a Roth IRA product, you can take advantage of tax-free crypto gains during this crypto bull market. So I would encourage everybody, click on the link down below, sign up for ITrust today, and take advantage of our $100 free sign-up bonus.
Well, you don't know much about crypto. You know nothing about You know nothing about nothing. You fake news.
But the challenge, as you know well, is the U.S. has had this very